Everyone, checking in on the market. So we had quite the FOMC reaction, initially bullish and then fading towards the end of the day. General observations: the tech sector is still the driving source behind this market. We had Netflix, Amazon, Apple, all these tech major names closing really strong. If SPY is going to get any kind of meaningful weakness, we have to see the tech sector and the tech sector leaders at least lose the hourly uptrend, and they were all ending the day with potential hourly bull flags. So that's step number one. Another thing that we have to be watching out for is if we're going to see any kind of weakness in the tech sector and some consolidation. The financial sector is now oversold to the point where are we going to do this back and forth where the tech sector pulls back a little bit, the financial sector bounces, and that balances it out so we don't have everything going down at the same time, which is what the bears need for SPY to see any kind of meaningful weakness. So SPX on the daily time frame right now is a potential daily bull flag. At the end of the day here after hours, we are still seeing further weakness and we are down near the low of the day. But we'll see where we end up tomorrow morning as we head into the open, as that matters more to me than what the after hours action is doing. And essentially, we're set up in an area with an hourly equilibrium. So on SPX, we have the high of 2 days ago, the low of the day. The bull reaction was just an hourly lower high, and then we faded at the end of the day. And now we're looking, can the bulls hold 28.12, the low of today, and form a higher low? Or are we going to confirm the trend change and look for further consolidation? If the bulls can hold that low of today and change the hourly trend in their favor, bull flag is likely. If we cannot and we drop to lower lows, the odds of a bull flag decrease significantly. We're still going to look for a daily higher low to form, but in terms of just looking for a continuation move, it'll be less likely. So that's what we're watching, and we're going to continue watching how the tech sector and the financial sector are trading relative to each other to see if one can pick up the slack where the other takes a breather. So, interesting FOMC reaction, significant bull move, bearish reversal doji on the 15-minute time frame, and gave most of it back. I was watching the 2-minute time frame on the exponential support. This is the 12-period exponential support on the 2-minute time frame. We held it one time, we held it two times, we lost it, and that was the shift in momentum. From that point on, we just saw lower highs and lower lows with a significant pullback. So let's just check in on SPY at the end of the day here with extended hours on and a little bit of a bounce is playing out. So looking at it on the hourly time frame, the bulls are attempting an hourly higher low to form, and we'll see if we have a tightening hourly range as we head into tomorrow morning. IWM, a much different look on the daily time frame. We are in this tightening equilibrium pattern. IWM bulls really want to hold 150.61 to stay in this tightening range, because if we lose 150.61, we're going to confirm the loss of the weekly uptrend. And that's going to be a much more significant development for the bears, as opposed to holding 150.61 and watching this daily pattern continue to tighten into next week if the bulls can hold that support. So we're going to watch for an hourly trend change. If the bulls can change the hourly trend, then that will tell us the daily higher low has been established. But with the amount of range that we saw due to the FOMC, we're likely going to see these hourly timeframes tighten up at least a bit more. QQQ, again, we haven't even started pulling back on the daily. And we did break the low of yesterday, but only by 5 pennies. I consider that a double bottom. So I can say that we have seen pretty much a higher low every single day for the last 8 days in a row. When that pattern breaks convincingly, we're going to look for a daily higher low to form. But again, you just run through all these major names and you can see they had extremely strong closes, referring again to those names that I just highlighted. So looking at the hourly time frame, we have this double bottom that's the most important support level. And right now we have the high of the day, the low of the pullback. Let's see, extended hours is on. So the bull attempt from the higher low is attempting to play out. Bulls are trying to hold 179.41 and see a bounce, likely to form a lower high. So again, another name that we're just looking for a tightening hourly range, but it's a much more bullish setup on the hourly time frame. You can see it's coming off of a bull break to higher highs. The consolidation was just an hourly higher low, whereas on these other names, specifically SPY, the bull break came off of weakness and still an hourly higher low, but a much different point of where we stand as far as, QQQ clearly being the lead bull. The market is on the shoulders of the tech sector right now, and it's holding it up at this point. So there's the financial sector dump, the lack of raising of rates leading to that downside, closed down at the low of the day, and the supports we're looking at are 25.98 and 25.68. Significant pullback, but we are going to anticipate that the bulls are going to hold 25.68. And the reason we're going to anticipate that is we are already oversold on the hourly, perhaps an hourly bear flag forming in extended hours, but we're going to be watching the 4-hour RSI, which is on the verge of oversold as well. So again, unless we reach extreme RSI levels, we will likely hold this support, at least on the initial attempt, and then we'll look to bounce and set a lower high because the size of the pullback is significant at this point. So again, just to repeat myself, what we're going to be watching for is, are we going to see tech sector consolidation? And if we do, are we going to see the financial sector bounce at the same time to ease the weight of bearish action on the S&P 500? Biotech sector following through from the double top rejection. So here's the range. Rejected. Now we're clearly pulling back. We're going to look for a higher low to form compared to 85.05, similar to IWM, but a more bullish standpoint because we got so close to resistance breaking, and an hourly equilibrium, or I should say a daily equilibrium, setting up on XBI. The hourly trend change will indicate the daily higher low has been established, and the hourly trend looks the same as everybody else as far as the big spike and then the pullback at the end of the day. So the question is, can these bulls change the hourly trend in their favor? The question is, can the tech sector bears change the hourly trend in their favor? And the lows of today are going to be key. Depending on where we open tomorrow, the low of afternoon consolidation and the low of today are the most important support levels that we're watching as far as all individual tickers are concerned. The VIX getting a little bit of upside and a little bit of follow through on the bounce on the daily today. So we're going to be watching to see if it's anything significant. Anything under 1830 is not going to be too significant, as that will just be a lower high compared to that level. But we know that there's some stirring in the volatility index as we see some slight consolidation in the market. I need to see a clear higher low and higher high. That's a trend change. Trends are our friends, and we have not seen a trend change ever since this 3620 high. Yes, we've broken lower highs on bounces, but we've never confirmed with a higher low and higher high. So not going to do that anytime soon, but it is something that we'll keep an eye out for. Oil is all bull. So again, oil's not pulling back. S&P 500 is consolidating a bit. But again, if we're going to see significant bearish action, we have to see financial sector weakness, tech sector weakness, the biotech sector, healthcare sector weakness, and oil weakness. If we only have one of those puzzle pieces or two of those puzzle pieces, we can anticipate that the consolidation and pullback on SPY is not going to be significant enough to lose the daily uptrend. So oil is extremely strong. We're right around the $60 psychological level, maintaining supports on the way up. We've got an hourly support of 59.53, and then we're looking down at 58.55 after that. And as long as the bulls keep this momentum in their favor, it's only going to help the S&P 500, in my opinion. Natural gas, forgot it yesterday. So there is a red flag on natural gas because when you get a bull break, you want to see follow through, especially when it's a clear double top. And we obviously did not. We saw a bull break and then a quick pullback. So we do still have the daily uptrend. It's not game over for the bulls, but it's absolutely a red flag that we need to make note of. So anything above 2772 is a higher low on the daily. And if we were to lose the daily uptrend, again, that just shows us that the bears are still strong and there's a clear wall of resistance just under 290. So not really comfortable being a bull on natural gas. We'll see what the inventory report does, but we have been in this channel on the daily time frame for multiple weeks at this point, and we're right in the middle of it still. So that's where we stand overall. We're going to be watching the hourly time frames as we head into tomorrow. Can the bulls recover and see continuation? Are those hourly equilibriums going to continue playing out through tomorrow? And does the tech sector ever see any sign of weakness? Let's just run through these names. Hourly time frame for Amazon, close up at the high of the day. Let's just look on the daily time frame. Amazon is a raging bull. Apple holding on just fine, trying for a daily bull flag. Netflix, raging bull. Clear bull break, close at the high of the day. Microsoft, a little bit weaker of a close, but still holding on just fine. Google got fined, confirming the breakout on the daily with continuation. So again, all the major tech sector names are full bull mode. That has to change for any kind of weakness in the market to last for more than just a day or two of consolidation. Hope you're well, do good things. We'll see you tomorrow. Have a great night. Adventure Time, Chapter 11D7. We've got, where are we going? Curacanti National Recreation Area. And heading back, curling around from Telluride, through Red Rocks, back to Boulder, where I'm going to do the house sitting. So again, just more national public lands to check out. Hung out here all day and just swam and lounged around in the sun, and that was the day's task. As I hopped around, I got to the point where, I used to be able to drive from college to home. I would drive 14 hours, sometimes in a row, sometimes peeing while in cruise control. But I quickly burned myself out, and then I started to really only do 4 hours at a time. Anything more than 4 hours driving, and I get pretty miserable. And so I would just hop and find little spots along the way. I pick a spot on a map, I know where my destination is, and then I just zoom in and look for green areas on the map and national parks and national forests where I can stop in between, sometimes out of the way, but usually not too bad, and some nice hikes along the way. More Curacanti, again, just a big open giant lake where you can hang out, camp, do whatever, boat. It's ours, it's public. We pay for it. Take advantage of it. So string cheese at Red Rocks was a great time. First time at that venue, heading back there in 2 months to see my buddy playing Papadosio. That'll be fun. I'll take some more pictures and footage there. But just a really unique venue in terms of being surrounded by the rocks, and obviously pretty iconic. And those are the rocks that are red. Baby chipmunk. So now getting back, and my task was to house sit for a month in Boulder and walk. This is Nina, and she is an Australian Shepherd. And man, if you have never seen Australian Shepherds, I'm sure there's a lot of work dogs that are up there in regards to it, but their drive is insane. And it's clear that they have been bred for thousands of years to just work, and that's all they want to do. And I have no doubt that, you could probably run this dog to death if you just threw a ball for 20 hours in a row. All she wanted to do was chase the ball. That's it. And she would do it for hours and hours on end. So it was nice to have a home base and be able to trade a little bit. I did some trading, be able to make food on a stove. That was nice. And just take care of the garden. She had a big old wall of peas and a bunch of raised beds that had been pretty developed. There's the backyard, a nice rainbow, great views. Pretty awesome backyard. There he is. So harvesting some cucumbers and beans and potatoes that were all grown in these little raised beds. You can see my matching pants. It's a funny story about those pants. I think I've already told it, but I'll save that for another time. Yeah, matching outfit. I don't know if you can tell, but I've been wearing the same outfit for 3 days in a row now. Whoever invented that you need to change clothes every day is a fool. I don't buy it. Some cool, they had what are these? Hot air balloons. They had a hot air balloon festival, so that was cool in the distance. I guess that's, I don't know what that is. If that looks too big to be a dove, maybe not. Anyways, raised beds, nice and established. That's all you need. The amount of food that you can grow in this right here is pretty remarkable. And you can definitely feed a family on that. So get some raised beds and grow some food. So I didn't do a whole lot aside from, explore Boulder, do some hikes in the area, check out the restaurants, and trade and take care of the dog, and then moved onwards westwards to Utah, which had some great spots, and we'll head there next. See you then.